If you could use $75,000 for your business in the next 7 days, then keep listening because I'm going to show you exactly how I was able to help a customer get approved for a 0% interest business credit card with a limit that high. I'm going to pull up and break down their actual credit report at that time so you can see what your credit needs to look like and share how we applied to secure the funding. So all of this is coming from actual data points that were used to get the approval and get that amount, as well as from my experience in getting businesses funded and being a former banker for one of the top banks myself. So first off, let's talk about what you can do with this money that you would get. Now, this is important because everybody wants to get access to a large amount of money to operate their business, but everybody doesn't really know what to do with that money. In this example, the business was actually a rental car business. And thinking about it with, $75,000, one thing that you could do is maybe go buy, maybe 2 low-end cars, something like that. Or maybe go buy a few more cars from a place that has older cars that are selling them for a few thousand, maybe 10, 15,000, something like that. But what this client was able to do was actually use this credit for multiple down payments on multiple better, newer cars. And yes, of course, that comes with getting a loan on the car. But a lot of the business owners running this type of business are usually using the payments that they receive from their customers to cover their car note. So it's really not coming out of their pocket, and they're covering the money that they would have came out of pocket for the down payment using their business credit card. Or at least that's what this client was able to do. Now, another thing this allowed them to do was pay their insurance on the cars up for multiple months. Cover and take care of the car cleaning expenses, the maintenance expenses. A lot of times people can really, run those cars kind of ragged because they know it's not theirs. So being able to cover those major expenses, that's something that having this much amount of credit can really help you with. And again, while I'm explaining this scenario, you should be thinking about how you can use this in your business. Another thing he was able to do was actually pay for a manager to actually run the business so that he didn't have to be, the front person talking to everybody and dealing with everything. And if a car needed to go get picked up or something like that, he can pay for that to be done as well. So again, also being able to get his time back by having the money available to put somebody in place and just train them to do what he would do. And if you have any software subscription services that you have, like for a CRM or for an email service or whatever it might be for your business, all of that stuff can be paid off in advance, like for the year, and you can get discounts on a lot of those things because you now have the ability to pay for those things up for the year. So ultimately, my point there is just make sure that you know how you can use this type of funding in your business so that you maximize the return on investment you get. Because ultimately, I don't want to just see you get money. I want to see you get actual usefulness out of that money that actually benefits your business and helps to eventually change your life in the way that you seeked out when you wanted to first start your business. So let's get into how we were able to actually do this by getting into the actual credit report and everything that goes into actually securing this funding. Now, there are 2 parts to this that are important. That is the foundation and then the funding. You have to set the foundation, which is the credit report, the business structure, all of the things that are going into making sure everything is in place before you actually apply. And then when you actually apply, that is actually the funding part of that. And the way that you go about the funding part is also very important and not what most people would think it is. So there are things that you have to get right on the funding side of this as well, which would more so be looked at as just the application part. But right now we're going to go into the foundation, starting with the credit report. Now, the bank that was used for this card is Chase, right? So it's important to know which credit bureaus is Chase going to check before you go to them so that you can know which credit bureaus you need to be more focused on. Even though you should make sure all of them are clean and look good, you want to definitely know what those bureaus look like that are going to be checked at that bank. Now, most banks are going to check one bureau, and usually Chase only checks Experian, but sometimes they check Experian and TransUnion. And for this client application, they actually checked both. They checked Experian and TransUnion. So we're going to take a look at what those scores look like at that time. And there's something very important to this client situation and people's situation going forward. I'm going to mention that later. So make sure that you stick around to hear that, because that is going to be very important to how this applies to everyone that hears this from the time I post this video going on into the future. Now, we can see here that this person's credit scores on Experian and TransUnion, which both got checked, was a 745, and we have a 733. Now, another important thing to note here, and this platform that we're using is MyScoreIQ. It's a very good way to check your credit reports because they're fairly inexpensive, and basically you can see all three reports side by side, and everything just looks cleaner. It's easier to read. It's just a lot better to use. And you can see here they also offer the different versions of your FICO score, like the auto score that applies if you're getting a car, and there's the bank card score, which applies when you're trying to get a credit card. Now, different banks might use different versions. You can see there's a score 8 and score 2, and you can see the score is different here. For the bank score, his Experian is actually a 763, and his with the bank score 8 is actually a 750. So his scores are actually higher for credit cards versus the base score, which we see right here. So that's important information to take into account too, because we are going to be applying for credit cards. And when it comes to credit score, of course you want your score to be as high as possible. Ideally, the closer you can get to 750, the more of the safe zone you're actually in. And, we saw the limit that this client got already being around that 745, or, anywhere between 745 to this 763 here. But his TransUnion score was a 733, and they did check TransUnion, and we did get that same result. But the closer you are to 700, the more that there might be a few things that need to be tweaked. But as far as score goes, these are the scores this client was at when he actually got this approval. And so right now we're looking at the accounts summary part of the credit report. And this is important because you need to know that as far as your credit profile, you need to have a certain makeup of credit profile. A lot of people like to rely solely on the score, but I had somebody come to me after being denied with a 770 credit score. So that should tell you that even though the score is important, it is not the only factor. And I'll always say that this is a layered process. There are certain layers that have to be checked off in order to make sure you're achieving these type of results. And in this instance, this client had about 17 accounts on his credit report that were open, 18 accounts in total, is what it says right here. But basically, they had several accounts on their credit report. So those of you guys that are just kind of like building up credit, you don't have any accounts on your credit report, that is not going to be enough to get you this. And ideally, you want to have at least 10 accounts on your credit report. And again, we see here that this client had 18. Can you still get a high result like that without having 18? Yes, you can. And again, the minimum that you want to have is at least 10 accounts on your credit report. Now, I want to draw your attention to something that this credit report says that is no longer accurate, but yet it still says that. And this goes into how there can be credit reporting errors out there that might need to be fixed. And something like this, you can see here, it says delinquent and derogatory, that there's one account pretty much on each bureau outside of Equifax. And then closed accounts, it says it has one. Now, some people out there look at closed accounts as negative, but closed accounts aren't always negative. Sometimes they are positive. And as a matter of fact, let me show you that now. Now, we can see here that this account that is on the client's credit report is the one that is closed. So that is the one that was reporting on all three bureaus that is closed. But you can see here that it is paid or paying as agreed. It's all on-time payment history. It was just closed by the credit grantor. So whoever he had this card with, they ended up closing it on their own without him, requesting it. Doesn't make it negative. It's just a closed account. Now, the other part I want you to take note of is the fact that it says that this person did have they had one delinquent derogatory account on Experian and TransUnion, which is the same two credit bureaus that Chase checked. Now, the error here is that basically, and usually if you see a delinquent, it's probably counted in the derogatory right here because the delinquent is derogatory. So this is probably talking about the same account. And in this instance, it is, or rather it was, he did have a collection on these two bureaus. That's something that we were able to get taken care of for him. So that was actually removed from his credit reports. But for some reason, they were still showing this up here. But I assure you that on his credit report, there is no more derogatory account on there. So by the time he actually applied, there was zero derogatory or delinquent accounts on his credit report. Now let's talk about the inquiries. So you can see here that they say he has 5 on TransUnion, 4 on Experian, and 3 on Equifax. Now, most people will look at this and just, say, okay, well, I don't have that many inquiries. I'm good to go. But there's actually more to it that you have to look at. You can see here these inquiries are within the last 2 years. What we need to know is how many inquiries, were there between the last 6 months in as far as time frame and within the last 12 months, because that gives us a gauge on how these inquiries might actually affect him in approvals. And ideally, you don't want to have more than 3 inquiries within the last 6 months. And that is the best rule of thumb. And of course, the less, the better. Now, taking into account that these numbers are for the last 2 years, I'm going to explain what this client had. And for this client, 0 of these inquiries were within the last 6 months. So that means he was totally clear within that time frame as far as inquiries go. Now, as far as the last 12 months, this client had 3 on TransUnion and 2 on Experian, and those 2 are the most important because that's the bureaus that were being checked. But you can see here how these numbers don't tell you the full story. You have to go and look at the actual dates. So again, this client, as far as inquiries go, they did not have more than 3 inquiries on these 2 bureaus within the last 6 months, and they ideally had 0, which is beautiful. Of course, that's the best way to go in. Another thing that I like about my Score IQ is it gives you these FICO score ingredients. And of course, if I haven't already mentioned, most credit monitorings, they don't give you the FICO scores. They actually give you the FICO scores in my Score IQ with the 3 bureaus, and for cheaper than myfico.com. But this gives us additional information that we can actually take a look at to determine some things that are important to the credit profile before going to do an application. And I have a link down below in the description for my Score IQ if you guys want to check it out. They actually have a $1 7-day trial, so you can test it out and see if you like it. But basically, we're looking at, again, TransUnion and Experian. So we're going to take a look at certain metrics that are important, those being the average age of credit. So you can see here that he has 6 years and 4 months as far as the average age of credit. Now, this doesn't mean that his oldest account is 6 years and 4 months old. He could have an account that is older than that on his credit profile. Of course, the older the accounts that you have, the better. But this is also taking into account, any new accounts that he may have gotten. And that, of course, would lower the average age of his credit report. We can see that he's again at 6 years and 4 months on TransUnion. And as far as Experian, same thing, 6 years, 4 months. And ideally, you want this number to be above 5 years. And, at minimal, you don't want it to be less than a year. But you want to be as far away from a year with a higher number as possible. So those of you that are just starting to build up credit, you of course will need to get that credit and, wait some time, because that's the only way that you can build up this number, by adding time. Now, the second thing here that's going to be important is the utilization at the time of application. You ideally want your utilization to be, somewhere in the single digits between 3 and 9%. Now, with this particular customer, we can find that right here to see where he was. And when we go and look at the details, we can see that his revolving credit utilization was 10%, and that is on Experian. And when we go to TransUnion, we can see that that is the same number here, 10%. So he went in at 10% utilization. And now I want to point out something that's also very important in here when you're trying to get those higher limits. And a lot of people, they try to avoid credit cards, or even when I'm talking to people that respond to the ads, they seem like they get a little bit sensitive when you ask them like what their credit limits are or how high their credit limits are. Because I think people think it's not very important to getting money from the banks, but they are actually looking at what you already have. And again, this is just a layer. This is just one piece. There are other pieces that go into this. If you have the highest limits possible on the personal side, you can still get yourself denied. You can still get yourself low limits. But I do want to show you how this client was able to obtain higher credit limits on the personal side on quite a few of his cards, which of course does help in getting to those higher numbers. You can see here, he has one revolving account on his credit report that has a credit limit of $17,500. We see another revolving account here that has a credit limit of $23,000. And that's just to show you that these higher credit limits on the personal side are obtainable, but you have to build credit in the right way to make sure that you are, getting those higher limit personal cards, because certain banks are going to give out higher limits for personal cards. And then, of course, there are other factors that go into it based off of your credit profile. But getting as high of limits as possible is always going to be good when you're getting credit cards and even requesting limit increases to get those up high if you don't initially have those higher limits. Now, right here in this area, you want to make sure that you have at least one credit card with a $10,000 limit at minimal. Ideally, you probably do want to have some $20,000 cards. As we saw, the highest credit limit he had on a personal card was about $23,000. But this area is something that you definitely want to pay attention to because it's definitely important when you're looking to get those higher limits on credit cards on the business side. And we still have a few more things to cover, but for right now, we're done with the credit report portion of things. But what I'm about to say still goes into the personal credit side of things. And that is when you are applying at Chase, there is what is called the 524 rule. And what that means is you cannot have opened 5 credit cards within the last 24 months. Otherwise, Chase will automatically deny you no matter what your score is, no matter how pretty your profile is, no matter how much money you got in the bank. If you hit the 524, they will deny you. And again, that has nothing to do with inquiries. This means that you actually opened, you were approved for and opened a credit card, whether with them or with another bank, it doesn't matter. Just you having at least 5 credit cards that are new on your credit report, or at least that have been reported to your credit report and opened within the last 24 months, that will get you automatically denied. So when you're trying to go to Chase, that is something that you do have to make sure that you have not hit, which is another reason why if you have to build up credit, you don't want to get too many accounts. So you need to try to get as high limits as you can within your limit of 4 cards so that you don't hit the 524 rule for Chase and have to wait 2 years before you can actually apply. Now, as far as this client's business, this business was one that was like recently filed before we applied. It was less than 30 days old. And of course, as you could imagine, this business had not generated any revenue yet. And yet we were still able to help this client get a $75,000 limit. Now let's talk about the actual funding side of this, the application side of this. Now, the first thing most people are going to do is you're probably just going to walk into your branch and you're just going to apply with, whatever banker you're used to or whatever banker is available. And some of you guys might actually just apply online and, that's the way that you do your applications for your credit cards. And I will tell you that both of these ways are not the way that we did it, because if you go that route, you will not get the same type of result. To get these type of results, you have to go through a relationship manager, and you have to go through the right one, of course. And those relationship managers do not work on the branch level where they're just dealing with all of the consumers that come in through the doors. They're usually in a separate office that is with other bankers that are, at the same level as them. A lot of times they won't work with businesses or touch the accounts of businesses that make less than $1 million per year, or that don't have a certain amount of money within the bank, like, talking 20,000, 50,000, sitting in the bank. So these are people that the average Joe kind of won't have access to. But of course, my clients get to leverage relationships that I have like that. And that is the method that we use for this client to apply. Now, I told you at the beginning that there is something really important that you guys needed to know that's going to affect how things go forward from here, you hearing this video, going on into the future in trying to do something like this. And what I'm talking about is being able to get these high limits on these credit cards. Business credit cards more specifically. Now, this client got the 75,000 when it was more common to see people getting the 75,000. Right now, it's more common to see 50,000 or something like that on the higher end from Chase specifically. Now, 75 isn't impossible, but it's just a little bit harder to come by than it used to be. All of that is because of several changes that most people don't account for when it comes to how the banks operate. Changes in presidency, changes in the economy, just looking at the overall trajectory of how things are going in the country. All these things affect how banks change their policies, how much risk they're willing to take, how much money they're willing to give out. And unless you've been under a rock, I'm pretty sure you know that there have been several changes going on currently in the country. And some of these things, we don't even know yet how they're going to affect us. But one thing that I do know is that banks already start to tighten up on the personal side. I have a client that recently came to me. His wife had a credit card with a bank with a pretty high limit. And basically, even after paying on time. Literally nothing wrong with the account. The bank just straight up closed the account. Didn't ask them anything, didn't say anything was wrong. The bank just closed the account regardless of all the good history that she had with them. So banks have been cutting people's limits. They've been closing accounts on people. And all of this is also due in part to a lot of issues with heightened credit card debt over the last few years, and some other factors I won't bore you with, but I just want you to know that things have tightened up with credit and credit cards on the personal side. And as things change, it's not impossible for it to continue to happen on the business side. As I've mentioned to you, me seeing the highest limits going from usually being 75 to being around 50 at Chase. And I know a lot of you guys have the credit score you need, have the credit profile you need, and you're just sitting there twiddling your fingers thinking that you have forever to go and get some money out there for your business, or you're out there getting loans or something like that, which you have to keep reapplying for, versus getting yourself a high limit business credit card where you don't have to worry about constantly going back to the bank. You can just always have access to a higher limit of money that you can use pretty much forever in your business. The point is, it's time to take action. If your credit isn't where it needs to be, now's the time to be getting your credit straight so that you can put yourself in place to get the money that you need for your business. I've already laid out what your credit does need to look like to get approved. And of course, there are some other layers and factors that go into it as well. But now is not the time to procrastinate. As things are changing and as we don't know what changes are coming, right now is the time to get what you need before it's too late and those limits are lower or the credit requirements get higher. Now, every bank is different in regards to the policies that they have and how much they give out. While Chase might be giving out this much, other banks might not give out as much, and there are some banks that do give out higher amounts, but it's about knowing which banks to go to and what their policies and procedures are. There are different banks in each state, so each person doesn't have access to the same banks, and you still have to know, the differences between the banks in order to know where to go and what to do. And look, if you need a streamlined plan, then you can leverage my funding and banking experience as well as my connections by just booking a funding strategy call with me down below in the description. I can take a look at your situation and see how we can help you get the money you need for your business. But if you're not ready for that, then you probably want to go ahead and check out this next video, which YouTube thinks you might actually like. So go ahead and check that out, and I'll see you in the next video.